Welcome to The Explainer. Today, we're uncovering the hidden mechanics that actually drive the Australian property market.
Let's dive right in. What truly dictates if those property prices go up or crash down?
Everyone obsesses over the RBA cash rate, right? Well, relying just on that is a massive trap.
2 decades of hard data across over 7,000 Australian suburbs shows us a completely different reality.
The real driver behind national property prices isn't the RBA at all. It's actually housing credit acceleration.
Think of it like this. The RBA is just the speedometer, but bank lending, that's the accelerator.
You know, it's not the cruising speed that pushes you back in your seat. It's the sudden acceleration.
Let's look at a couple of real-world scenarios to see exactly how this plays out in practice. In scenario A, banks ease serviceability and shorten approval times. Boom! Prices rise without any RBA cut. But look at scenario B. A rate cut is literally useless if banks simultaneously restrict that credit flow.
That's why post-2020 prices exploded from credit acceleration, then plummeted in 2022 when lending just choked overnight.
So what does all this high-level macro data actually mean for your personal borrowing capacity right now?
Crazy enough, your borrowing power can swing by up to 100 grand without your income even changing.
This happens because banks quietly tweak their serviceability buffers or change how they assess your rental income.
So forget the RBA for a second. You should be tracking these 4 real-time market signals instead.
When monthly credit growth starts accelerating faster than before, that is your absolute best early warning sign.
But brokers actually see an even earlier signal, that 150-day journey from initial inquiry to final offer.
When those broker inquiries climb, it signals a buying frenzy months before public data ever catches on.
Conversely, when calls shift from "how much can I borrow" to "will I get approved," credit is contracting.
Having a broker gives you inside access to this real-time data. It's honestly a massive unfair advantage.
So, want to time the market? Stop guessing the RBA and ask yourself this crucial question instead.
Are banks loosening their criteria right now, and is your borrowing capacity ready to strike?